Hey guys, what's up? Welcome to TradeFacts YouTube channel. I know it has been quite some time since I posted videos on my YouTube channel. Apologies for that. I got tied up in my work. So that's when I thought, why am I not able to monitor the stock market during office hours? I had so many meetings, discussions, and so much of a hectic workload and all that stuff, right? So that's when I thought, okay, let's derive one strategy which will be working for all office working professionals, right? So let's see what is the strategy is about. Okay, for this positional strategy we are going to select three indicators. Let us see one by one. So first indicator will be moving average exponential. So this we are going to make it as a fast paced moving average, fast moving average. So let's make it, let's have it in blue color only. I will make it a bit thicker. Okay, so this is here exponential moving average of 20 days. Then select another moving average, exponential again. And this is going to be our slow. And this is going to be our slow moving average. I'll make it for 60 days and I will choose a different color, that will be red. Okay, so let's see what is the strategy about. So this is a conventional moving average crossover technique that we are going to see. The difference that we are going to make in this is the time frame which we are selecting. If you see, I have selected here daily time frame. Okay, so usually this moving average crossover will be used within a day, that is for intraday trading, right? So for example, 5 minutes chart, 15 minutes time frame, 30 minutes, 1 hour, usually people trade like that, and the trade will be for a much shorter period and the profits also will be lesser. But in this case, see for example here, so let's recall the moving averages that we have selected. Blue is our fast paced moving average and red is our slow paced moving average. Whenever a fast moving average moves above slow moving average, so then the trend becomes bullish for that stock, right? So for example here, if you see the crossover has happened here, so from here you could have took a buy trade and let's see till where it has gone and like how much profit it has went after that, right? Say for example, just take a minimum swing. Actually, let's see a minimum swing we will take. Okay, so 760 points, 35% within 72 days, less than a quarter, less than 90 days, right? Okay, let us see when we can book our profit. Once we enter the trade, let's see when we can book our profit. So for that, I'm going to include our third indicator, that is SuperTrend. Okay, for this I'm going to vary the parameters a little bit. So the period I will make it from default 10 to 20 and the multiplier factor will be 3. Okay, so let us revisit our trade which we took for buying, right? So this is the area where the crossover happened and we took a buy trade from here. Okay, so see the trend has been riding on the same uptrend direction, and at one point it has tried to touch the super trend and again bounced back. Only once the price is closing below our trend line, say for example here the price has closed below our super trend line, right? That is when we can close our trade. So let us calculate how much profit we could have booked. Simply, like for example here we took 2037 and we have booked till, and we have exited at this point, right? So approximately 820 points, 40% aram se we can book actually. So just that we are holding it for 120 days and like 800 points, 40% within 120 days is humongous, right? Okay, let's see how bearish trend trades can be took using the same strategy. Okay, so let's see an example for bearish trade. So the rules for bearish trade are same. So whenever a fast moving average is crossing below our slow moving average, so then the trade becomes bearish, right? So and the price structure should be below our moving average crossover. So here if you are able to see, a crossover has happened. So initially the fast moving average was above slow moving average, then slowly it has crossed over at this point, then our bearish trade signal is triggered. So that time onwards we can, at that price onwards we can take a bearish trade. So let's see if you're able to see like how much huge movement has happened, and like we can just carry forward for a substantial good amount of time, right? So here the crossover has happened. Let's see how much profit we could have booked. Close to 3000 points, right, within 57 days. Okay, let's see practically when we will get a signal for exiting, right? Let's delete this. Okay, so for booking our profit, we will be using SuperTrend Indicator. Let me enable that on this chart. Okay, so now the rules are same, guys, actually, for closing the bearish trend also. So we will be looking for lower lows. Once the price is closing above our SuperTrend line, we will be closing our trade. So let us calculate the amount of profit that we could have booked from the time of our entry. From here 7,000 to here. So if you see the price is closing above this super trend, so here is where is my close point, 1600 points within 63 days. Humongous profit, guys, within 63 days. We can just hold our futures short and roll over to the next month contract, and we could have booked close to 1600. So in case you want to calculate how much profit could have been earned using one lot, you guys can make the calculations using the future contract lot. Okay, so guys, this was our strategy for positional trading using moving average, a simple trick. Fine, guys, that was one of our simple trading strategy for short to mid-term holding positions for both bearish and bullish trades. We'll see you next with yet another video on another trading strategy. Let me know your feedback in comment sections. In case if you want to know about any other trading concepts, please let me know that too. Thank you. Bye. Take care.